A very good morning from Khandwala Securities Limited and welcome to Thursday's trading action at Dalal Street dated February 24th, 2022. Well, the roaring Russian bear has sent the S&P 500 into correction territory and most importantly for the first time in 2 years. The S&P 500 is now over 10% down from its early January all-time high. Digging deeper, the Nasdaq remains in correction territory. The Dow Jones Index would need to decline another 2% to mark a 10% drop from its 3rd Jan record high. The big question, will the correction or panic be short-lived? Honestly speaking, Russia's decision to move troops into eastern Ukraine continues to favor bear's camp. Investors across the globe will now spy with one big eye if Russia goes for a full-scale invasion. Putin's next move is the key. That said, in Russia-Ukraine crisis, the big elephant in the room is China. We say so because China has repeatedly declared its intention to reunify with Taiwan, an island off the coast of China that is democratically self-governed but claimed by the People's Republic of China. Also, please note Beijing and Moscow this month declared a no-limits partnership. Putin and Xi Jinping released a joint statement on February 4th calling on the West to abandon its ideologized Cold War approaches and declaring their opposition to NATO expansion. China has been generally supportive of the Russian position on Ukraine, but we will spy with one big eye if China takes a decisive stand on the issue. Next of relevance for equity investors across the globe is the virtual G7 meeting on Thursday, 24th February. The participants are likely to discuss on the geopolitical situations related to Russia-Ukrainian border. Sentiments will continue to whipsaw on the latest signs of war or peace in Ukraine. Look unlike. That brings us to our call of the day, which suggests that the de-escalation of a conflict looks unlikely, favoring the bears in the near term. Technically speaking, both the bulls and bears will return to their previous rightful places, bulls all around and the bears nowhere to be seen, only if Nifty moves above its biggest hurdles at 17,807 mark, intraday hurdles seen at 17,421 mark. We suspect any weak rebound attempt will again be swept aside by bears at around Nifty 17,350 to 17,421 zone. So selling on strength will continue to be the preferred trading strategy. As they say, ऊंचाई पर पहुंचकर कुछ परिंदे भूल जाते हैं, आसमान में घोंसले नहीं बनते. Now, here are other key things and themes we need to know before market opens. Volatility is likely to be a hallmark of today's trading as February F&O series expires on 24th February 2022. Ukraine and inflation are the two wildcards that could even force the RBI to reset its recent dovish policy. At the time of recording, the US crude oil futures were seen steady at $92 per barrel. Finance Minister Nirmala Sitharaman was seen saying that the escalating crisis between Russia and Ukraine and the resultant surge in crude oil prices is worrisome. In investors' growing list of things to worry are also the trends relating to 5 state elections including Uttar Pradesh, Punjab, Uttarakhand, Goa and Manipur. The results of all these elections will be announced on March 10th. The Nifty options data for February series suggests Nifty is likely to be in a trading range of 16,500 to 17,800 zone. Maximum call open interest is 18,000 followed by 17,500 strike price. So the 18,000 mark will be Nifty's crucial resistance zone. Maximum put open interest stands at 17,000 levels followed by 16,000 levels. Call writing was seen at 17,500 and then at 17,700 strike price, while there was meaningful put writing at 16,900 and then at 16,700 strike price. Bank Nifty's maximum call open interest at 39,000 strike price while maximum put open interest at 37,000 strike price. In yesterday's trade, FIS selling spree continued as they sold to a tune of Rs 3,417 crores, resulting into total outflow to nearly 30,852 crore in February. FIS have offloaded more than 1.64 lakh crore worth of shares since October 2021. That's all we have for now. For any queries, do contact us at 02240767373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.